Hello everyone, welcome to my channel. Today, let's do a technical analysis of supermicro computer stock. I am a swing investor, and I will not consider the stock price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 week to 3 weeks. Welcome to subscribe to this channel. Supermicro computer stock rose further on Thursday, which makes the stock technically still in an uptrend. If it is measured in months, the stock is currently in a downtrend. But the price trend of the stock in April seems to be very different from that in March, which means that the stock still has a chance to break through this downtrend and rise further. But it should not be too optimistic. Although the market has been in an overall uptrend in the past 2 days, this wave of catalysts seems to have been consumed, and this wave of uptrend of the stock seems to be a technical rebound because the stock price has fallen too much before. Judging from the trading volume of the stock, the long capital that entered the market when the stock price was low in April may not have exited the market, so the stock still has a chance to rise further. Let's take a look at the 30-minute chart of the stock. We can see that the stock had a lot of transactions when the stock price was low on April 4th and 7th, and there seemed to be a lot of long capital inflows. But then the stock price generated a lot of transactions again in the area above $32.70, and there seemed to be a lot of chips sold by short sellers, so $32.70 became a key reference position. On April 23rd, the stock price was above $32.70 and a lot of chips were sold. We temporarily believe that these chips were eaten up by long forces. But on April 24th, a lot of chips were sold in the late trading. Were these chips eaten up by long forces again? I think this is possible, but it is a bit early to draw a conclusion now, and we should observe at least 1 to 2 trading days. If the stock price falls below $32.70, then we can consider whether the stock is about to enter a downtrend. Although the bullish forces in the area below this price may block the short selling again, in fact, if it really falls below $32.70, it will make the bulls more passive, but I think this is unlikely. Let's look at the weekly chart of the stock. In the past 4 weeks, the stock has formed 2 bullish candles wrapped around 2 bearish candles. Technically, the stock is currently in a relatively positive price pattern. If the stock price remains at or above the current price level after the close of Friday, the stock may still rise further next week. Judging from the trading volume of the stock in the past 4 weeks, the current bullish force of the stock is not much stronger than the bearish force, which corresponds to the analysis of the previous 30-minute chart. If the technology stocks turn to a downward trend next week, then the stock will also follow the decline, and the decline may even be greater. So based on the current market situation of the stock, it seems that there are not many long trading opportunities. Let's look at the position distribution data of the stock. Most of the current positions of the stock are distributed in the $27.60 to $36.70 area, and the current price of the stock is at the top of this area. Obviously, the stock is still supported by bullish forces. But the stock currently has a large number of positions distributed in the $32.60 to $36.70 area. If the stock price falls below this area, then the situation may not be good. On the other hand, if the bulls can keep the stock above this price, the stock may open up another profit margin next week, which is consistent with the previous analysis. Let's take a look at the analysts' price forecast for the stock. Based on the ratings of 9 analysts on the stock in the past 3 months, we can see that the buy rating accounts for only 44%, which does not seem to be very high. The average target price given by these 9 analysts is $48.13, but I think this price may not be reached in the short term. The $48 level has a potential increase of 35% compared to the current price, but this figure seems to reflect that the stock has little room for growth, because the stock is still technically in a downtrend in the past 3 months. In addition, there has been no catalyst from the company level recently, so the current rise and fall of the stock are basically based on the capital level. Let's go back to the daily chart of the stock. After the technical analysis of the stock, I am still positively bullish on the stock. Although there are still some potential adverse factors, it has not yet happened, and everything depends on the final price trend. The bullish sentiment of the market may decline in the future due to the stock price being at a critical position. At the same time, investors will become more cautious in their trading. As we have analyzed before, the current bullish force of the stock is not much stronger than the bearish force. But if the chips sold in the market are eaten up by the bullish force, then obviously the current price of the stock has limited profit margins for these bullish capitals, so the stock price may still rise further. Although the $48 level is a bit difficult, if the bulls of the stock withstand this wave of correction, then in the short term, the stock may still reach the $40 level up to $43. Okay, guys, this is my price forecast for Supermicro computer stock. If you like my analysis, please share and subscribe to my channel. See you in the next video.